Hey guys, this is another look at ZB. Starting here on the weekly log scale charts. At left is ZB price, at right is 30-year yields. The high on yield today was over 3%. So we are flirting with the 41-year secular channel on yield, 30-year yield. And if we make a new low next week, we will be punching out of this channel. There will be an overthrow. We will be, I don't know what the high on yield will be exactly, but it's going to be more than 3%. So, sort of the base case scenario we're working with is that this is a fifth wave down, and we're now in a wave 5 of this fifth wave, looking for potentially a bottom as soon as next week. We had the original channel right here, this solid channel, which contained this weekly close on this side and this weekly close on this side. We have now two weekly closes below this channel. This dashed line is, we see this all the time with channels on weekly log charts. It's a potential stealth support level. It's simply drawn off of this low, and it's a line that's parallel to this original channel. So if I were gonna bet, I would say that next week we come down and touch the stealth support line, which is around 138 more or less, and that has the greatest likelihood of being a bottom of anything we've seen so far, assuming that that can be contained in the weekly Bollinger Band. So, typically lows are not made on these excess spikes outside of the Bollinger Band. It's when price comes down and makes a low, even a lower low, but remains inside the weekly Bollinger Band. So I'd like to see us touch 138 next week inside the weekly Bollinger Band for a potential swing low down here. I think that's it on this chart. So going to the 2-hour chart, again, here is the big purple channel we've been in, and this is the big fifth wave from one side to the other, and the structure we're looking at is a 1 down, a little 2, and then a 1 of 3, 2 of 3, 3 of 3, 4 of 3, 5 of 3 down. 1, 2, 3. The third wave was this large gray channel here, where you had the wave 1, 3, and 5 on the bottom, and the 2 on the top, and the 4 only made it back to the center line. That was a very weak fourth wave. So since this low, we've had what looks like a simple ABC correction that has broken out of the third wave channel, which may be a wave 4. It could be all of wave 4, or this wave 4 could subdivide. We could have 3 up and then 3 down to the bottom of the range. We could even make a new low and then have a 5 wave up, so it would be a big running flat correction. But I'm sort of leaning towards that this was all of 4, and we're now in a wave 5 down, and we've had a 1, 2, and now we're in a 3 of that 5. So next week we'll be looking for a 4, probably a little bounce near the low, and then a fifth. That's sort of the base case scenario we're working with. We're looking for a bottom, essentially. The setup that traded, however, we have to respect it. It is a lows to lows extension off the bottom of wave 1 right here. This wave 4 traded basically the 38.2 retracement. During these third waves on ZB, we've seen several instances of lows to lows extensions trading 38.2 retracements to 618 targets, but we're not in a wave 3 anymore, which makes me a little suspicious of this setup. It's a little too aggressive. And, that would give us a target down at, if that lows to lows is what traded, there are targets way down here. And so to get there, we would just have to wreck this pretty orderly channel we've been in for this whole cycle. So I'm skeptical that we're going to hit these targets. I understand that that setup is what's traded and we have to respect it. So you just can't throw caution to the wind trying to catch the low down here. You have to manage your risk. I mean, this is on the table, but if I had to bet, I would say we're not going to hit these targets. So if we go to the hourly chart, if we just first look at the coming off of that low last week, we traded essentially along from lows, and yes, it dipped in, but it ran to its 618 target. And so, this fourth wave channel, this blue one, was created. We had 1, 2, 3 points of contact, and the spike of the channel and the spike of the 618 target, that was the top. That was the selling opportunity. And so, just looking on the hour chart, we had a clean 5-wave move off the low. And it's a simple rule, but when you get one 5-wave move, you should expect another. And then we had an ABC back that dipped into the 618. It was trading a stealth level down here. But this low held one tick above this low. That was the sign that the long was holding. Then they defended at this low, and then this low was probably the best entry point. And so, the way to read this, if we had 5 up and then an ABC down, we essentially made a series of higher lows, right? We went 1, 2, 1, 2, 1, 2, 3, 4, 3, 4, 3, 4, and then we made a 5 into this tick perfect double top, spiking the 618 target, spiking the channel right there. That was the reversal zone. So, if you didn't trust this long from lows, the other entry was this long from lows, right? It traded all day on Friday, and then the opening bar on Sunday, the opening second, they spiked, they did a stop run across Friday's range. They dipped into this second 618 level here by one tick and reversed hard and ran from essentially 140 to over 143. So that was the second lower risk entry. So, the simplest scenario is that this was an ABC correction and it's over. And so since then, what we seem to have had, I'm going to capture all of this, is a coming off of that 618 target, we had a clean 5-wave move down. 1, 2, 3, 4, 5. And then we had an ABC up into this short from highs. Let me take off that second setup right here. So we, and then this was a wave down this morning, this aggressive 9 a.m. bar. And what this 9 a.m. bar did was it broke the long from lows. This low over here was at 138.14. We broke the long from lows right here, and then we immediately squeezed all the way halfway back. And we front ran this level by 4 ticks right here. And so the way I'm reading this is that we had a 1, 2, 3, 4, 5. There's a 1 down, And then in here, it's clear on the tick chart, that was a 3-wave move up. That was a 2. And then this aggressive sell this morning was not 3, but it was a 1 of 3. The squeeze up into the short from highs again was the 2 of 3. And now we seem to be selling off pretty aggressively in what could be a 3 of 3. Which means that next week during FOMC week, there's a 618 target down here. We should see a 4 of 3 and a 5 of 3 to complete this wave 3, and then we should see another 4 and another 5. If we don't see this other 4 and 5, that's a sign that this fourth wave is not complete. And at that point, we will essentially have had, to the left of this chart, we would have had the big 3-wave rip up, and then we would have had a 3-wave rip back, essentially to this 618 target and the lows down here. And then we could have, like I said, a 5-wave move up for a big expanded flat 4th wave correction. So we have to see a 4th and a 5th wave down there, at the right degree of trend. So it would be 1, 2, 3. We got to see the 4 and the 5 down here. That's sort of the key to telling what's happening next week. Is that everything I want to say? I don't remember if I talked about this, but when we hit this low down here, 3% yield was around 139. And then today, right here on this bar, it was around 416. 3% yield is now up at around 140. So if next week we're going to hit this stealth support line down here around 138, which would put us 2 points below, I'm going to be super interested to see what the yield gets to. If we make a new low next week, you're going to be hearing about yield about 20 times an hour, which is going to be another sign that this is potentially an intermediate bottom down here. So it's it's not a sure thing, and I think the primary alternative, like I said, is that this 4th wave is going to confound everyone, and it's just going to be 3 waves down into the low, and then it's going to reverse. So we have to see this develop into something that looks like an obvious 5 waves down, and then start trying to get positioned down here. And again, I am going to be watching to see if next week's weekly candle stays inside the weekly Bollinger Band. Typically lows aren't made spiking outside of the Bollinger Bands like that. And so if we do spike outside of it again, then it's possibly a sign that this 4th wave has more work to do and needs to chew up some more time down here. So, we could print 2 more weekly candles down here in this range if that's what's going to happen. Is that everything I wanted to talk about? Yeah, I think so. This structure has served us well. This has been just an amazingly technical series of channels, and it's one of the reasons I trade ZB so much and like it so much, is that it's so technical, both fib setups and just these classical TA setups, channels and trend lines. And when you combine the two, I found that's when it gets really sort of powerful in painting a full picture. So again, the key next week: watch the previous low, watch the stealth support line, and watch for the unwind of a 4th and 5th wave. That's how we'll know that this is potentially a bottom down here. That's all I have time for. Thanks, guys.